Prince Pipes and Fittings is headed to the primary market with a 500 crore IPO. Yash Upadhyay, he's standing by to tell us a little bit about the company and what's on offer here. Yash, good morning.
Morning, Devina. So, like you rightly mentioned, they are coming out with the IPO and it opens today for subscription. They are looking to raise about 500 crore rupees, and the breakup of this goes as follows. So, they would be raising about 250 crores via fresh issue, while also giving the existing promoters the opportunity to exit. So, the offer for sale would entice four large promoters selling close to about 1.4 crore shares in the company, and that would also garner the balance 250 crores. At the upper end of the price band, which is at 178 rupees a share, the market cap of the company post issue would turn out to be closer to around 1,958 crore rupees. Now that would bring down the promoter shareholding in the company to about 66% from 90%, and increase the public shareholding from about 10% to roughly around 34% in the company post the IPO. Now the proceeds that would come in from the offer for sale would not be plowed back by the company, but the 250 crores that it would raise via the fresh issue, that would be utilized for the prepayment of some of its outstanding loans, as well as the setting up of its new manufacturing facility that they are planning to come up with in Telangana, as well as upgradation of some of its existing equipments and other corporate general purposes. But as far as the company is concerned and what it does, well, it is present across the product change in both the pipes and fittings business. So it sells 4 different types of pipes and 3 different types of polymer fittings that they do across 2 of its brands, which is basically Prince Piping, which is for the pipes business, and Crore, which is for their fitting solution. They have a fairly wide geographical network selling these products across India, with a distributor network of almost 1100 plus and 257 wholesalers as well as retailers. As far as their manufacturing capacity is concerned, they have total 6 manufacturing plants having an installed capacity of 2.5 lakh tons per annum, and they plan to set up yet another plant in Telangana by the end of next year, which would have a total capacity of somewhere around 52,000 tons per annum as well. Coming to their financials now, they have been growing steadily over the last several years, and from a top line of about 1,081 crores in FY16, they have managed to grow it up to about 1,600 crores by the end of FY19. For the current financial year, we only have information up to the first quarter, and there too they have done fairly well, about 380 crores in the first quarter of the year itself, and about 27 crores in profit. So they have steadily managed to grow both their top line as well as the bottom line.
All right. Yash, how does it stack up in terms of its peers though?
Take a look at their financials first, and they have managed to outpace most of its peers at least. As far as their revenue growth is concerned, over FY16 to FY19, they have managed to grow their top line at a compounded annual growth rate of 13%, which is more than most of their peers. At least Astral Poly is the only one that has managed to beat it. Even in terms of the operational performance, it has managed to beat most of its peers, and in the bottom line front, completely outpacing the kind of growth that the other 3 large players have witnessed, be it Supreme Industries, which is the largest amongst the bag, holding almost an 11% market share of the organized piping industry, as well as Astral Polytechnic, which has done fantastically both in terms of returns as well as financials. As far as the return ratios are also concerned, again we are seeing a similar trend. It has managed to beat most of its peers, despite being the 6th largest in the industry, almost 20.5% return on equity, and plus 20% when it comes to return on capital as well. And that is one of the reasons, and apart from that, one of the biggest reasons that the couple of brokerages that I managed to get my hands on are positive on the issue is that there is comfort as far as the valuations are also concerned. So take a look at the price to earning multiple, and as of FY19 at 20 times, it is substantially cheaper than the likes of Astral Polytechnic, which is almost double to that, as well as Supreme Industries. Phenolex, we have seen substantial amount of underperformance, and there have been concerns with respect to growth, and that's the reason why it isn't quite expensive. But both on the EV to EBITDA front as well as price to earning multiple, the stock is fairly priced, and looking at that, most of the brokerages too are optimistic that the valuations being fair would mean that the company the IPO is positive.